one of the biggest problems you will have is you'll get to a point where you'll have partnership agreements. Then that partner will tap out on what their ability to open more businesses. So you as a visionary, I'm a visionary, so I want to build more businesses. I go find another partner. Then I have non-competes or compete issues, or I have all sorts of issues. I have overlap, whatever. And I'm like, okay, I wish I had somebody that can actually communicate with the attorneys and how do I deconstruct these things and deconflict all of these things? Okay, I want to launch a this, I want to launch a that. How am I protected? What about my insurance policies? Every single year, instead of just letting my insurance company come in and go, hey, your policies are going up 30%, 90% of people just pay the additional fee.
Yep.
My company that essentially I'm paying a guy like you, they go, we're not accepting that. We're going to go get 15 other quotes. They find the one, they switch over. I'm like, wow, that was less expensive than last year. Everybody's saying insurance costs are going up, but because you have the guy, bro, it's by far, I'm not joking. I would pay so much more money than what I'm paying monthly.
Yes.
It feels like I have a team because I do.
You do have a team, but you're communicating with one person that has the team for you.
Yeah, and I go, who on your team's doing that? And they go, that is not your concern. You just need to worry about it getting done.
100%.
Because I need to focus on making more money, not dealing with the crap.
Not dealing with all these relationships too. You're going to have a relationship with the attorney, the financial advisor, the mortgage lender, the CPA. What if you just have a relationship with the advisor that understands exactly what you're trying to do? Yeah. And then they communicate with the attorney, the CPA, the advisor, and they can go execute for you. Keeps you in the driver's seat.
I've only known one other company actually provide this service before. I'm glad that you're doing this. This is insane. So how can people use this service?
It's called Synergy Private. We typically work with clients that have a net worth of 10 million or above. Okay. They get on a call and it's a enrollment process.
Yeah, but these are the kind of clients that are like, tell me where to sign up.
Yeah, you would just reach out directly to me on social media and I'd get you on a call.
Okay, cool. Yeah, these are the best kind of clients for you.
100%.
Because they understand the value immediately. Like somebody else is like, what would I pay? Why would I pay somebody for that? It's like, it is the most valuable person in all of my companies, my partners, my CFOs, my everything. Everybody goes, I just need to talk to Ryan, right? I go, yeah, just talk to Ryan, just talk to Ryan, just talk to Ryan. Everything. I get an update on my portfolio. I get an update on my net worth. I get an update on all of these things.
All my entities, updates, all of it every single month, not waiting quarterly or at the end of the year. This is being done in real time every single day for that person.
Now, are you also doing tax strategies? You're telling them not in December or in November or in October, you're going, hey, based on your current money that you're bringing in, you're going to have this tax liability. We got to start planning what you're going to do and how you're going to strategize. You're doing that as well?
Yeah, we're doing quarterly projections. So we're projecting out your income every single quarter.
You're attracting the best possible clients on the planet. All these people worth $10 million or more all need this.
Yeah, 100%. Yeah.
My word.
But most of them don't even know what this is. So they go and pay for all these different things. And then they go and have assistants to try to communicate all of it. Then they get frustrated with their assistants. Then they end up talking over their assistants and jumping on these Zoom calls and phone calls. By the time they get the deal done, they've lost the deal or they've missed out on an opportunity, and money loves speed.
Did you just follow me for a couple of years to learn all my pain points?
I mean, I think I know which types of clients make the best sense for a family office, and you definitely fit that threshold.
Yeah, I did. I think at some point, maybe in 10, 15, maybe 20 years, I'll have my own dedicated family office.
You will.
But you'll have to convince me to build my own.
Yes.
Based on how simple this has become in my life.
Yeah.
Okay, I'll give you a good example. I see this franchise opportunity called Funbox, and essentially it's like $1 million in, you've got a 40% cash on cash return. So I put $1 million in, I go create a location, and I get $400,000 at the end of the year. Pretty good little thing.
Yeah,
I own real estate, I get tax benefits, all the things. My family office, or my fractional family office, like Synergy for you guys. Synergy Private, it's a great name.
Thank you.
It's a great name.
Bringing it all together.
Freaking smart. So Synergy Private would essentially look at this and go, here's why we don't like this business for you.
Yes.
You keep saying to me, Pace, that you don't like employees. You're going to have 24 employees that are all age 16 to 21 years old. There is going to be high churn, this, that, and the other. Here's your insurance issues. Also, it's a fad. It's going to be gone in 7 years based on the data. I'm like, wow, I was about to write a check for $1 million until you told me otherwise.
And here, by the way, Pace, is 6 other deals similar that actually match your criteria that you're looking for, because now that we understand that you're interested in this, all you had to do is ask.
And more importantly, you also have other clients that you're serving that you see where they're winning. So let's say I come to you at Synergy Private and I go, hey, I've got money I need you to just run my world. I need you to be my family office, which is essentially what you're doing. And I go, well, what are your other clients doing that are winning? You have aggregated information based on 50, 100, 200 other clients that are all happy with your services.
Yes.
And you go, yeah, well, these guys are really have an appetite for this. These guys have an appetite for this. And either way you choose, they're winning on these fronts. Instead of me feeling like I have to go make these decisions on my own.
Yes.
Bro, I don't want to do that. I want to do what I'm really good at.
Yes.
For some of your clients, it might be playing ball. It might be fixing people's teeth, but it definitely isn't managing their money.
That's right. And because we have an RA, we can work as an investment advisor for them and be able to actually share with them real results and real numbers. So
freaking amazing. Okay, here's a question. I don't like Airbnb.
I know you don't. And I started seeing more of that content lately. So we're going to have a
I'm
good
talking
conversation.
a lot of shit on Airbnb lately. In fact, I have a client right now.
Yeah.
Not a client. I have this homeless lady. I don't know if you've seen this.
I have. You've been like helping her get into real estate, and
so I think
she just bought her first property, right?
Yep, she's moving in. My wife and I are going on a date right now to go pick her up from the shelter and move her into this house.
Oh my goodness!
It was a failing Airbnb, so the Airbnb operator's like, just take the house, take the furniture. I hate Airbnb. I can't figure it out, right? Okay, I know a lot of people go into the Airbnb realm because of the tax benefits. I feel like that's the number one thing because it's the loophole for the everyday 9-to-5 person. I have a ton of active income, but I'm not a real estate professional, and I want that cost seg. It's super beautiful.
Yes.
It's big, beautiful freaking tax bill, right?
Yep.
Are there not other assets that I can own that give me that, like RV parks, where the average stay at an RV park is 4 days? Could I not just go and buy an RV park and get that same tax status, tax professional status, not professional, real estate professional status?
Yes, you can buy an RV park, and as long as the tenants are staying for 7 days or less on average, and you're materially participating 100 hours more than any other person, you can get the same benefit on an RV park that you could on a residential property running an Airbnb or a short-term rental.
Okay, perfect. So here's why I don't like Airbnb. Part of it's experience. The other part is I did it wrong. So I'm saying that honestly. I took a class from an Airbnb guy that's like, buy any Airbnb, it's crushing, blah, blah, blah. I think the guys that are doing it really well are saying, let's go buy super properties and super locations that are right near national parks.
Yes.
Like they're going to win no matter what.
Yes.
I like those. But the everyday, I got a SubTo deal or a seller finance deal, no money down. Let me just turn it into an Airbnb. That doesn't work because it needs to be in a really good location. If I'm trying to get into the game of taking tax depreciation,
yes,
I don't have to go Airbnb. I could go RV park.
Yes.
How do I know what material involvement, like what is that? Describe that to me.
Yeah. So material participation is and
100 hours more than anybody else?
Yeah. 100 hours. And you need to spend more time than any other person. So if you have somebody that's helping you,
100 hours.
100 hours is nothing pace. It's like an hour a week in a 52 calendar year. It's crazy easy.
Okay.
Yeah. So essentially what you're doing is you're showing the IRS that you're managing your property to the point where they view you have active participation. They've defined material participation as 7 different tests inside of the tax code. But
Do you have them memorized?
Not all 7 of them. I have a good amount of them memorized. One of them is 500 hours and more than any other person. One of them is spending 100 hours and more than any other person.
So I don't have to have all 7. I just need to have one of the 7.
You just need to have one of the 7.
And the one that's the easiest is the one that you've probably memorized.
And that's 100 hours or more than any other person. And that's where most people gravitate towards. Is the most easiest of them all, the 100 hours.
Right.
So closing escrow and going through the process of closing escrow is a part of material participation too. Getting your property up and running on an Airbnb or VRBO or an RV park website is a part of material participation too. Going and sleeping on the mattress, if you want to test out the mattresses, counts as time spent in the property and managing the property. So this is you essentially working in the day-to-day operation of your business.
Okay. What about getting educated on it?
No, education time does not count. I know.
Okay, so people that buy like an Airbnb course, that doesn't count.
No, you can't just sit there and blitz, 100 hours of Airbnb course and then say, I got my hours. That doesn't count.
Okay, you have to be managing the asset itself.
Yes, you have to be managing the asset itself. So you have to impact the day-to-day operations. But that can be from home too sometimes, right? You can impact the day-to-day operations from afar.
So you could be doing marketing and SEO and managing the website and getting the bookings and dealing with the cleaners. And you don't have to go to the property.
That's exactly what they want to see you're doing.
Could I not use AI to do the majority of my 100 hours?
You can use AI, but you need to make sure you're spending more time than any other person. So if you have AI supporting you, technically AI is not a person. So it's you doing it. As long as you have a system in place, it's technically you doing it.
Okay, I love it. All right. So here's why I like RV parks a little bit more. It takes as much time for me to buy an RV park as it does for me to buy a single family house.
Yes.
It sounds crazy.
Yeah.
I can go buy a $5 million RV park, no money down, seller finance. I can go to Crexy.com, go buy one. I can also go do a single family home, turn it into an Airbnb. When I buy an RV park, they're already cash flowing, right? I'm buying them from a retiree. Somebody's like, I'm ready to go. Mom and, Pop and I are ready to retire and get the heck out of here.
Right.
Give us monthly payments. We're going to go travel, right?
Yeah.
They're easier to negotiate with. I start cash flowing on day one. My worst RV park is $13,000 a month net.
Nice.
And I look at it, I'm like, what's our average stay? Our average stay on all of our RV parks is 4 days. So why couldn't I just do RV parks instead of Airbnb? The downfall would be, how much are you materially participating?
And how much depreciation are you receiving? Because I would argue an RV park may not give you as much building value compared to land value, depending on how big the RV park is and where you're buying.
Right.
Whereas if I buy a residential home, let's just say in Florida, my purchase price, let's just say, is $1 million. 90% of that purchase might be the building, 10% might be the land. So I might have $900,000 of depreciable asset. Whereas in an RV park, the same $1 million may only give me $500,000 of depreciable asset, even though it may be cash flow positive. So it's figuring out what is the real end goal. Is it cash flow? Is it tax savings? Is it a combination of both? And this is where we can start looking at different assets that matches the customer's
If I'm
goals.
watching from the audience, how do I find that out? Like determining what's better for me. Do I need to talk to somebody on your team?
You absolutely need to talk to a tax advisor, but you also have to get yourself educated on real estate strategies. When I say real estate strategies, there's different ways in which you can go into real estate. You have to decide, do you want to go into long-term rentals, short-term rentals? Can you stomach being in a short-term rental? Are you open to RV parks? It's a completely different model from having a residential home. You're going to be fixing different things than toilets and bathrooms that are more situated in a residential home. So this is why I personally think having a good head around real estate strategies and talking to a tax advisor can help you come up with a conclusion around what you feel comfortable doing.
Okay, so I've got Synergy Private, which is your fractional family office.
Yes.
What about just getting tax advisement? What if I'm not somebody who has $10 million plus net worth?
Yeah.
You have that as well.
Yeah, you'd go to Tax Alchemy for sure.
Okay, so Tax Alchemy. Let's talk about the big, beautiful tax bill. Anything you hate about it? Anything that the Democrats are right about?
We removed renewable energy credits, which kind of sucked. I mean, that was probably the one thing that was like, all my solar guys that were investing in solar no longer receive that 30% tax credit. That's a big deal. And if you buy EV cars, I mean, you're not getting the $7,500 EV credit
It's
after
interesting
this year.
why they would take that away. You have any insight on why they would take that away?
He needed to move money to be able to fund the border wall. So you cut in some places and you add in others.
Okay. What are the things about the big, beautiful tax bill that you do like?
I do like the fact that they increased the child tax credit from $2,000 to $2,200, and it's refundable, meaning you get more of that money coming back to you if you don't owe taxes. For low to middle income people, it's actually pretty good. That means when they go to file their tax returns, if they don't owe any taxes, they get a bigger amount of refund coming back to them just because the government increased the child tax credit. It's a credit, not a deduction. That's one that I really like.
Okay. I have 4 kids.
Yes.
What should I be doing tax-wise?
If you have 4 kids, for you should be looking at placing them underneath payroll and determining how much we can give them based off of their ages. The IRS will allow you to pay up to the standard deduction amount, which is $15,750, without your children needing to file a return on the federal side. But we also need to make sure that based off of their ages that it makes sense for us to pay them that amount.
Okay, so I have a 1-year-old boy. It doesn't make sense to pay him $15,700 a year.
It'd be very hard to pay a 1-year-old boy $15,750 a year, but maybe if you really wanted to stretch it, you can possibly show family photos and do more of a modeling thing for your real estate business.
Merch.
Have him as baby merch, baby SubTo merch. I love that idea. By the way, I would love to get some for my daughter. If you're going to really come out with a product line, we would love that.
We'll get some onesies.
But then now you can place your child on payroll and possibly pay that child maybe $1,500, $2,000, $4,000 for the year. Something very reasonable for the amount of photo shoots that they're going to be involved in.
I get a full tax deduction off that?
You would get a tax deduction. You could take some of that money and put it into a Roth IRA.
So I put in my kids' Roth IRA, and what happens there? I then have to find a place to invest it.
Yes, you could invest it in the S&P 500 if you don't touch it. I mean, they're going to have close to $1 million by the time that they're 65 years old if you just do this one time. But I would absolutely recommend placing it into the Roth IRA, putting it into something conservative.
I have a 17-year-old boy. How long until I can't do that anymore with him?
You'll be able to pay him until he turns 18 without him having to file taxes. Once he becomes 18, he's going to have to report the income and file taxes.
Okay, so I go after the tax. What do we call this for the kids?
Children on payroll strategy.
Okay, children on payroll strategy. I get my 1-year-old, my 3-year-old, my 6-year-old to model for my merch for my company.
Okay.
I get them on the website. I have a modeling agreement, $15,700 a year. I pay that to them. They pay no taxes on that. I take that money. I put it in a Roth IRA.
You can put $6,000 in a Roth IRA, and now it's growing tax-free.
What do I do with the other $9,700?
You're going to have that money chilling in their bank account, possibly even reinvest it if you can.
Okay, cool. But what's great for me is I have a full tax deduction, meaning I pay no taxes on $15,700 coming into my business.
That's 100% correct.
Okay, that's pretty good.
That's pretty good.
Okay, anything new from the big, beautiful bill?
Well, one of the biggest things that you and I love is that we got 100% bonus depreciation back. We were slipping here for a second. We were about to be in 40% bonus depreciation this year. Even I was looking at real estate and being like, ooh, It
almost didn't make sense.
It almost didn't make sense. But now that it's back at 100%, the government's literally paying you to buy real estate now. You go put a $200,000 down payment on $1 million property, you're getting a $250,000 deduction from depreciation when doing a cost segregation study. The government's literally paying you to buy real estate now.
It makes no sense for people to not own real estate at this point.
Exactly.
You're losing
regardless
money.
of interest rates. It
Right.
makes sense. It does not make sense not to own real estate.
Okay, somebody told me about a new account that Trump has for kids.
Yeah, the Trump account.
Okay, tell me about this Trump account.
Yeah, so the Trump account is $1,000 retirement account that they're putting together for children. Let's do that again. The Trump account is $1,000 retirement account that they're providing to children underneath the age of 18, where the government is going to fund $1,000 into every child's account. And what?
Like one time?
This is just a one-time fund.
Those cheapskate sons of bitches give me $1,000 a year.
Well, the cool thing is that the money gets to be used for starting a business, purchasing a home, or paying student loan debt if they need to. But essentially, it's going to be a taxable account when they do draw from it later.
Okay, got it. So the government is going to put $1,000 into an account for my children.
That's correct.
So my 1-year-old, my 3-year-old, my 6-year-old.
Yes.
I can't do anything with that until when?
Till they're 18.
Okay, so when they're 18, whatever does it grow? What can I do? Can I invest?
Oh yeah,
it
the money is invested. Absolutely, you can have that money
invested. Do they
invested.
invest it or do I invest?
You
it?
invest it.
Okay.
Yes, you have control of what it's invested in. If you want to dump it into NVIDIA, you can. If you want to dump it into Tesla, you can.
This is actually pretty gangster for a lot of people that are like maybe low to
Yes.
middle class. You're getting $1,000 into your kid's savings at the age of day one.
Day one.
And by the time 18 years goes, the compound interest on that for 18 years, I don't know what it would be. Can I add to the account?
You can add to the account. Yes, you can.
Okay. Do I get any benefits for adding to the account?
No, you do not receive any tax benefits for adding to the account.
Would it make sense for me to even waste my time on that?
It would make more sense for you to build a Roth IRA account instead of adding to that account. Let that account just sit and ride for your children. You build up the Roth account for your child by placing them on payroll and getting a tax deduction. And with the money that you didn't pay taxes on, then you funnel it into the Roth IRA.
I love it. Okay. This is great. This makes me want to have more kids. Are you guys done?
I don't think so. I think we're going to have one more. Yeah,
okay, cool.
I love
So
kids.
big, beautiful bill comes out.
Yep.
A couple of things I'm getting is I'm getting full deductions on my tax depreciation.
Yes, you get 100% bonus depreciation back.
Okay, which is great because what I did is we're actually clawing backwards, which is great.
Yes, we love this. It's permanent now, by the way. We don't even have to fight this anymore. It's 100% permanent depreciation.
It's so great. So tell me if my team is doing anything wrong.
Okay.
So in 2024, I think we're at 60%, or we are at 60% this year.
We were at 40% this year until the big, beautiful.
Okay,
bill.
last year was 60. The year before that was 80.
Yes.
Number one question I get every day is, how do I get everything done? I have 9 companies, 600 employees. We have customers all over the globe. We're doing fix and flips. We're doing buy and holds, apartments, RV parks, all of those things. Everybody wonders, how did I scale? How did I get to a higher level? And the answer is that, GoHighLevel. I use a CRM that allows all of my customers to come into one database. And instead of me hiring more employees to go and do all the follow-up, GoHighLevel has systems and automations that does all of that for me. So not only can I have my employees focus on higher end tasks, money-making tasks, GoHighLevel avoids all of the extra payroll. When you're brand new, having GoHighLevel is like having 5 different employees doing all the work for you just for a monthly fee. Go to GoHighLevel.com/pace to learn how I'm using it, not only in my lending business, but my wholesale business, my fix and flip business. Literally, GoHighLevel controls the entire back end of all 9 of my companies. Go to GoHighLevel.com/pace to learn more.
Okay, So my team is going backwards to the 80-year, 60-year, and they're clawing back the depreciation I was not able to get.
Yeah.
Is that possible?
I'm not sure if that's possible because based off of the way the bill is written, 100% bonus depreciation is enacted on January 20th of 2025. So it's based on properties placed in service January 20th, 2025. I went back and I reread the bill, and I was thinking the same thing because I did cost segregation studies on a few properties last year at 60% bonus depreciation. And I was like, oh, I'll just get this caught up. No. Mm-mm. And so as of the way I understand it right now, and, you know, I'd be curious to see if there's any other tax professionals that comment, I don't believe we can use what's called the 3115 form to recover the depreciation on this case because the bill states as a property placed into service January 20th, 2025. And that's how I understand it.
What happens if I try to do it and then they don't like it? Do I get audited? Like, what's up?
I mean, sure. Maybe it's not even an audit though, Pace. Maybe it's just a notice that's saying, hey, that we're disallowing this, and then you have to refile and pay the penalty and interest fees on it. And I know you. Sometimes you like to roll the dice.
I will roll the dice on something like that.
I think you would.
Like, it's significant enough that I wouldn't have
It
to
is
buy,
significant, bro.
Like, I literally in 2023, I bought $100 million in real estate just from people in my community.
Yeah.
And I was at 80%. So there's $20 million
Of leftover.
leftover. And then in
That you couldn't
2024,
accelerate.
no. And then in 2024, I was at, I think I bought $60 million in real estate. So what, 60%? I've got $14-15 million sitting on that.
Based off of the
It's
way
worth
it's written,
it.
based off the way it's written, it's date placed in service. And it states right now, January 20th, 2025.
Date placed
so
in
even
service.
if you bought an
What if I
investment property,
change my strategy from Airbnb to midterm rental and now it's in service as a midterm rental? Could I loophole this shit?
I don't think so. Even if you bought a property from January 1st to January 20th, you would have still gotten 40% bonus depreciation because the bill says
That's messed
January 20th, 2025.
up.
So unless I'm able to do catch-up depreciation with a 3115 form, which is not what this situation is intended for that form, I'm not going to be able to catch up that depreciation.
Dude, I can see why I need a tax advisor.
Yeah. So
Okay.
I'm just sitting there reading this over and over and over again.
Okay. Cost segs 100% depreciation is back.
Yes.
I've got $1,000 account for my kids.
Trump account.
Trump account. That's so gangster that you can just call an account after you.
So cool on that.
I love the ego, dude.
He was cool on that one. I was pretty smooth. Most people don't like it, but I was like, yeah.
No,
it's a
it's
big
dope.
flex.
If you were the president, you'd do the same.
I would do the same thing.
Okay, so I get $1,000 from every one of my kids.
Yeah.
It doesn't make any sense for me to add more money to this. It's better for me to go after the child labor laws.
Yeah.
Child slavery, whatever we call it.
Well, if you have a business,
What do we call this?
You could place children on payroll.
Children on payroll
strategy. If you have a business, I would recommend building a Roth account. Even if you don't have a business, I would recommend building up your child's
The only
Roth account.
downfall to the child slavery situation is that you now have to put that money in the Roth IRA. They're limited at $6,000.
Yes.
I then have to go and figure out what to do with that $6,000, which is where maybe you guys come in.
Yeah, absolutely. You can have an investment advisor, an RIA come in and help
Because I
you
see a lot of
invest those
people go
assets.
and get like a self-directed. They go this route, and then their money just sits there, do nothing.
Does nothing
Do you see this a lot
all the time
with your clients?
Yes, not with my clients. No, we don't let them do
Well,
that.
obviously when they come over to you. But
Yeah,
I'm sure you have
they have
clients that come
accounts.
over to you, and you're like, "What are you doing? Why is this money just sitting in your self-directed?" Like,
Well, we set it up and then we didn't use it, and then I don't know. And what do you think we should do with it?
exactly.
Yeah, all the
Okay,
time.
so I got my cost eggs. I've got my $1,000 Trump account. I've got my children on payroll, $15,700.
Taxes on tips.
Taxes on tips. That doesn't help me, but
Yep, but that was a part of the big beautiful bill, and one that helps out a lot of people in Vegas, at least. Where now, instead of the elimination of taxes on tips, was what Trump proposed. What they landed on was the ability to deduct up to $25,000 of tipped income that you received. So if I'm working in Vegas and I receive $25,000 of tips being a dealer, as long as my AGI is beneath 100,000, I can deduct up to 25,000, and then it starts to phase out once you cross over 150,000 adjusted gross income.
another way to get around taxes on tips is just don't report your tips, guys. Just there you go.
I mean,
is that not already a thing? Like people are
as
not.
a licensed enrolled agent, and I have to tell you to report all of your income and just make sure you're working with a tax advisor so we can offset that income.
Okay, cool. And when should people start working with a tax advisor?
People should work with a tax advisor year round, because when you're doing tax strategy, you have to be proactive. We have to already be thinking in 2026 for you right now in 2025. Whereas with your CPA gets a phone call in January. Hey, it's time to file my taxes. Can we send over all the data to you? And you let us know, when it's time to actually hit the go button and submit it to the IRS. That's more or less, what your accountant does for you. But your professional is working 24/7 for you, creating projections and helping you implement strategies in real time.
Let's say that I'm a business that does like $100,000 a year in revenue, and I'm just a solo operator. I take home $60,000 a year out of that 100,000.
Yeah.
Right. My cost of goods sold is 40, whatever. Should I have a tax strategist at that level?
No, you do not have enough income to where it draws out a tax strategist. You're paying less than $30,000 a year. And to be honest with you, you probably just need a good bookkeeper and a CPA to file your tax returns. You need an S corporation since you probably have profits over 50K or at 60 grand. You just need a good S corp, a good bookkeeper, and a CPA.
What's the trigger? What's the price point, or what's the income level that I need a tax advisor?
You need a tax advisor when you have the liquidity to invest in strategies. What people fail to understand is in order to reduce your tax bill, one or two things are going to happen. You're going to give the money away, or you're going to reinvest the money into something that the government wants you to do. I love oil and gas and real estate as the two primary vehicles for me to reduce my taxes because both of them give me active deductions. But at the end of the day, I'm still having to spend the money in order to save on the taxes. Some people would just say, oh, I'd rather pay the taxes. I would rather have cash flow producing assets and not pay the taxes. That, to me, is more patriotic than just giving the government the money and saying, hey, go send it off to whoever else you want to send it off to.
Yeah, it's interesting. I look at what I own, right? And the beautiful thing about what I get to do is I bring in my income. The money that I take home after all my expenses, I actually go put into my lending business to make more active income. And I don't put any money into my real estate because obviously I buy with creative finance. And so my family office is like, you are literally the only client we have that is buying real estate without money out of your pocket. They're all having to deploy capital. People don't realize that. They think they're just getting deductions or getting these. It's like, no, you've got to deploy cash. You got to have liquidity to go and do this for the most part, right? On the gas and oil side, what do you like about, what's the strategy you like?
What I like about it is you can invest in a working interest and you can deduct the intangible and tangible drilling costs. Essentially, all the things that go into making an oil and gas well produce oil and gas. An active person has to be there working that oil and gas well 24/7, and you can deduct the equipment as a part of the oil and gas well, and this all becomes a loss.
Payroll too, or no?
There's no payroll. Well, the employees that are being hired by the oil and gas company are tied into the expense that flows over to the investors. So you get to take a percentage of the deductions of payroll, I guess, as an expense for the oil and gas, the labor cost that goes into oil and gas.
So I imagine for your Synergy private clients, you have gas and oil investments that you guys suggest and say, hey, we've vetted these people. These are good investment type of things.
Yes. In Synergy, because it's securities, we do recommend certain companies that they have access to. And they can make their own choices around which ones that they would like, but we can provide advice on that side of it for them.
Okay, what are you doing for your child or children now that you're going to start having more kids?
Yeah.
Anything investment-wise you're going to do for them?
Yeah, so for my daughter, as soon as she becomes 2, we're working on this right now, is we're going to place her underneath payroll. She's going to become a model inside of my business. It's going to work out really well. I'll be able to pay her a reasonable fee. I want to get it right up to $6,000 so then I can open up that custodial Roth IRA and fund $6,000 to a Roth. As she gets older and older, she'll be able to earn more and more money, and I can push up towards that standard deduction amount. But what I'm also doing is I'm opening up a 529 plan. Part of the reason why is I believe in college. I do want my daughter to go to college, and she'll be able to make that choice for herself. But at least whatever funds she doesn't use for college will be rolled over into a Roth IRA now that 529 plans allow for you to use any unused college funds to be rolled over into a Roth IRA. Last but not least, I set up a life insurance policy that I built for my daughter that she'll be able to have access to later on.
What do you say to Dave Ramsey, who says that life insurance policies are a scam?
I think that it's one of the ways in which people have been able to transfer wealth in our generation. And most people look at life insurance as a scam because you have so many salespeople that are selling life insurance to anybody. And so most of it is a scam, to be completely honest with you. I'd say about 70% of sales guys are just young kids that are trying to eat every single day. So they're going to sell you a policy because they need to eat. But if you really do your due diligence around life insurance and you work with the right type of people, it could be one of the smartest investments you make.
Okay, so I want to get a whole life policy or an IUL for my daughter. How can I transfer wealth to my kids? Is it through my passing? They inherit the cash from my death, and now they're getting a big chunk of money when I die, but they don't pay any taxes on that.
Yeah, that's essentially how it works. And not only does it help your family because of how big of an estate that you're going to have, you might have multiple policies that allows for them to get these payouts to cover the estate taxes that are inevitable because of how big your estate pays. As much as you plan on doing, you may not be able to do enough because of how big your estate is going to be that they're going to inherit. They're just going to have estate taxes, which is as high as 40%. So you establishing the right type of individual life insurance policies for them, or having individual life insurance trusts for them that enact for them to be able to pay out the tax bills when the time happens, is going to allow for them to be able to not deal with stress after you're deceased.
It's crazy to me that people don't have policies. It's once you understand the power of it, I look at them like, oh my gosh, you guys are being scammed by believing that these are not the most gangster thing on the planet.
Yeah, I just got a loan yesterday for like $250,000 from one of my policies at a 4.5% interest rate.
And you got it in one day.
And I got it in one day. Now I can just go take this and go invest it in something that's going to make me more than 4.5%. I just arbitraged my own money that's inside of my own insurance policy.
It's crazy.
Isn't crazy? It's incredible. I don't know why more people don't do this.
Oh, okay. So clients come over to you, right? Synergy Private.
Yes.
What are like the top 5 things they're doing wrong or not doing at all?
It always starts off with restructuring their entities because their entities are all over the place. And what I like to do is I like to make sure that entities flow up to a great parent company. If you have multiple different businesses, what's parenting all those different businesses? Most people don't know that you can set up parent companies in states that give you better protection, like Delaware or Wyoming. Especially for real estate, we love Wyoming. For business, we love Delaware. That being said, that's normally where we start. From there, we project out their income, and then we start looking at what strategies match the client, not just on the investment side, but on the income shifting side. Should we shift income into a private family foundation or a charitable remainder trust or a donor advisor fund? Or should we look at shifting income into a corporation that supports the business that doesn't file tax returns in the same year as their other businesses? It could have a different fiscal year end. Me and Dean were at lunch today, and I was talking to Dean about the fact that my company, Tax Alchemy, has a C corporation that files tax returns on a different fiscal year end than my S corp. So when I get to the end of the year, and if I haven't bought enough real estate, we pay a management fee over to my C corporation where I get a tax deduction, and my C corp doesn't file tax returns until 2026.
Gangster.
That means I just have another 12 months to spend down the money, technically 9, to spend down the money before I have to pay taxes on that C corporation. These are strategies that you can layer together to mitigate your tax bill, but most people just get caught up in one thing.
You have multiple different packages to come into Synergy Private.
Yeah, Synergy Private is entirely custom because when you're working with somebody, they may already have a portion of the family office already built out. Karlton, I have all my mortgage lenders and all my bankers. I don't need any of this. I just need the CPA, tax pro, attorneys, the financial team, and for somebody to quarterback all of this. So that package is completely different than for somebody who needs the entire playbook, right? And so every single person that has big amounts of net worth comes with their own different types of teams, but they don't have the one person quarterbacking their team. So we're going to have to figure out what is missing on your team and plug and play.
Okay. CPAs, AI, are all the CPAs cooked?
I don't believe CPAs are cooked. I think that AI is coming to support CPAs in what they do, which in my mind, CPAs are really great at making sure you file an accurate return. And most importantly, they can do complex thinking on those returns. Accounting is where I feel like CPAs are going to get replaced. If you're sitting
And
in
bookkeeping,
front,
right?
Yeah, that's essentially what accounting is. If you're doing bookkeeping as a CPA, that's more of a low-level skill on the totem pole of what your license gives you. So accounting is already, in my mind, being done by AI and can probably eliminate some of the mistakes that humans have at a higher rate. Why would you want to build a bookkeeping business or be in that space knowing that that's exactly what AI is coming for? What you need to be doing is looking at tools that you can use to sharpen your ability to deliver services quickly and accurately and timely. And that's what I'm doing with AI inside of the tax space.
Are you guys doing anything bookkeeping-wise, accounting-wise for your clients?
We were planning on opening up a bookkeeping business and going in that route. Now we're not, and we're outsourcing it to a company that's focused on incorporating AI.
Smart.
Yeah.
And you're doubling down on
Tax advisory and tax prep.
which is almost impossible to be replaced by AI. It will only be amplified by AI.
Correct.
Because what you're doing is every client is so uniquely different, not even from their money, their income, their location, which are somewhat predictable, but their personality types are not.
Yes.
And so you guys going and building a relationship with those individuals and going, okay, based on where you live, how many kids you have, all of these types of things. Okay, we could ask AI what's the best thing, but you also have an appetite for real estate. I hate oil because I have been burned in it. I love real estate. If you came to me and go, Pace, I love the oil stuff. I go, no, Karlton, don't bring the oil stuff to me. You go, okay, great, no problem.
Mm-hmm.
You have the ability to now be personally involved in these people's lives.
Correct.
Which is something that AI will not be able to replace.
Yes, relationship.
CPAs, I think, are babysitters and they will not be replaced. Tax advisors that are a step above that are even harder. And then you look at like private client type of stuff, what you're doing, bro, good luck.
Yeah.
Like you're heading directly where you should be heading.
I appreciate you saying that, man. And I have a lot of people around me that have encouraged me to jump into these different spaces because I'm a visionary, but I also don't, take time to really think, okay, well, what should I be in knowing that I'm moving this fast?
Mm-hmm.
I have people around me that have gotten me off of, my little treadmill and said, hey, hold on a second. Let's step back and look at the bigger picture here. And I think this is what we're capable of doing.
Who beside yourself do you rely on the most in your business?
I would say between my COO and my president, those are probably the two people I rely on the most. My president makes sure that when I'm not there, it always feels like I'm there. And my COO is another brain like me. He thinks almost very similar to me, but he has more of an executor mindset than a visionary mindset that can allow for our team to drive ideas quicker than most advisory companies. We can pivot so fast, whereas some people are like cruise ships. We're like a speedboat when it comes to turning corners.
I just realized one of the other great things about not focusing on just being a CPA, CPAs probably make all their money or most of their money in a handful of months in the year.
Correct. The first 5 months of the year is when CPAs make a majority of their money.
Versus doing private client, fractional family office, you are making a monthly income every single month from these people.
Yes.
And they need the help year long.
Correct.
In fact, like I am talking about strategy, like you said, in 2026, I'm talking about that right now in 2025.
Mm-hmm.
Dude, you're doing it the right way.
Well, most people don't understand either how a CPA firm is built. It's built off of a numbers game. If I can treat as many people as I possibly can on tax preparation, and I can onboard as many of them as I possibly can, and I have a good enough team, I'm going to spend the down months of May, June, July, and August filing all of those returns. So I can't be busy communicating with them or be forward thinking or coming up with tax strategies when my business model is make as much money on the front end, bring in as many clients on the front end, then do the work on the back end. And then you get into the end of the year where you give out the estimated tax payments. That is how a CPA office works. A tax advisory office works the completely opposite. We're not working off of historical data that we have to input into your tax returns. We are thinking through where you're going. So we have to forecast your income. With the remaining 4.5 months we have left in the year, we should already know how much a client's going to owe and what we should be doing to mitigate that tax liability, which means we should be calendaring out what strategies we need to implement. Are we going to do the short-term rental rule? When are we going to do it? When are we placing your children on payroll? When are we investing the money into oil and gas? When are we parking money into that movie film, which is another strategy as well? So these are things that we have to do.
Did you just say a movie film?
Yes, you can invest money into the production of a movie film and receive a 4X deduction because movie films are financed. They're seller financed, by the way. And this gives our clients a 4X deduction. I invested in 3 movie films last year. I put $500,000 in and I got a $2 million deduction. And I'm getting cash flow from those movies, by the way. The first cash flow goes back to pay the recourse debt, but then anything after that is profit.
Why has nobody told me about this?
Most people don't even have access to this type of deal flow.
Are you telling me I got to go to Synergy Private? What's up?
Synergy Private is right now one of the only multifamily offices that has this deal flow.
Okay, love this. Typical client, you're looking for somebody at $10 million or more in terms of net worth.
Yeah, for Synergy.
You're not managing their wealth.
No, not unless we need to. Most of them, we don't manage their wealth. I would say
you advise them.
Yeah, we advise them,
You
provide
make
services.
suggestions.
Yes.
Okay. Have you had a client that is content with life? Meaning they have high net worth and they're like, I'm so content. I'm not trying to grow anymore. I just need you to maintain my wealth. Or is every one of your clients that you onboard sitting there saying, I want to double my wealth. I want to triple my wealth. I want to quadruple. The main question is, do these types of people ever slow down?
I have no one that comes to my brain. And I'm sitting here thinking right now back to when I was working in my mother's office. Did I even run into somebody? Because that's where it really started, when I started to have an affinity with working with these high net worth individuals. There's only one guy that I met, Pace, that came into my mother's office. His name was Carl. And I'll never forget that. My name's Karlton. You don't forget people whose names are Carl. And he was older, and he was in his like 80s. And when I went through his returns, his businesses that he had meat packing companies, distribution companies, farms, real estate, commercial buildings. And on line one, 100 million rev. I'm like, whoa, this guy's big deal. And even that guy had his hair lit on fire about what he wanted to do and how he wanted to expand. He's the only person that literally I look back to and I'm like, I don't think we're ever meant to really slow down when we find our passion, because this guy is living proof that you have hundreds of millions of dollars in stuff, hundreds of millions of income coming in, and you're still here talking to me like you're an 18-year-old kid about meat packing companies and how you're going to expand.
Freaking love that. Got me all fired up.
Yeah. I was young Karlton with no real estate yet, just sitting there looking at returns, just being like, one day.
What's cool is that you get to see what's possible.
Yes.
Right. And you get to see that it's on somebody's like their revenue, their income is on a line that they are choosing to file with the IRS. Like, this is not fictitious Instagram numbers. You get to watch these people.
100%.
And they're people that nobody knows.
Yeah.
Right. And so they're just like the everyday millionaire. Some dude's bringing in $100 million. Again, it comes down to maybe the money is how we keep score, but it's just this path of personal discovery of like, how far can I go while I'm on this planet?
Yeah.
Freaking cool that you get to be the scorekeeper of all these people's goals, essentially.
Yeah, I tell people I have an unfair advantage because I get to see the no bullshit when I'm looking at tax returns. I see people all the time that have, social media followings, but then when it comes to the tax returns, the numbers aren't there. And then I see people all the time that have zero social media. They look like librarians and they're sitting on mountains of money. And it is just so humbling to know that social media does not dictate your work ethic or your ability to build a life that can provide for your family. And so it's pretty awesome. I love it. I love being in the seat.
Karlton, you're the freaking man. Speaking of social media, where can people find you?
Everywhere on social is my name, Karlton Dennis. But if you're looking to work with our team, I would tell you to go to taxalchemy.com. If you're somebody that's at that point where you're looking for family office services, visit us at Synergy Private.
Or DM you personally.
Or you can DM me personally.
Do you find that most of your clients come on board and they go, I want to have a personal relationship with you, or no?
Most of my clients, when they get onboarded, want to have a personal relationship with me and get to have a personal relationship with me because I crave it too. I can't turn around and say my clients are doing this if I don't know who they are.
Right.
And I like to be able to talk from the ability that that's my client, not just my company's client. Don't get me wrong. I'm proud of my company. But I want to be able to say, yeah, that's my client, Gerald, his daughter, his wife were placed on payroll, and I know exactly what's going on. So yeah, I have 900 clients, and I know all 900 of them.
Damn.
Yeah.
Bro, you're the man.
Thank you, bro.
One of the most common questions I get is, what title company do I use? What title company am I using in Arizona, Atlanta, California, Texas, whatever? The answer for many years was a different title company in every state, because not every state handles transactions the same way. Now, the answer is one title company. It's Creative Title and Escrow. Go to getcreativetitle.com/podcast. You can learn how they will do SubTo deals, seller finance deals, cash transactions, gator deals, double close, transactional lending, whatever, even novation agreements. There's really nothing that Creative Title and Escrow can't do. To learn how brand new investors are using Creative Title all the way up to the biggest players in the industry, head over to getcreativetitle.com/podcast.